Hi and welcome back to Cheeky Crypto. My name is Nick and today guys we're going to be jumping down into the charts for both Bitcoin and Ethereum, taking a look at what's been going on most recently and what I might expect to happen next. Now as I get into this video, if you find it useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not consider subscribing, tapping the bell, selecting all the notifications, and in doing so you will be kept up to date with everything that we do here at Cheeky Crypto. Now if you have not yet joined us in Discord, the link is in the description down below. It's a fantastic community talking crypto 24/7. It's completely free and I don't think you'll be disappointed by what you find down there, so why not go ahead and check that out today. You'll also find a couple of additional links down in the description down below. You'll find links to our Patreon services where we offer a lot more, such as buying, staking, selling alerts. These are movements that Chris and myself are doing, all the way through to trading, portfolio reviews, project reviews, AMAs, and a whole host of additional benefits. Now, if that sounds interesting to you, why not check that out in the description down below? Although do wait until the first of the month, as Patreon has a habit of charging per calendar month rather than for a certain number of days. So just give it a few days if that is your bag. You'll also find in the description down below a link to the new community-led Cheeky podcast, a fantastic podcast keeping everybody up to date with what is going on in the ins and the outs of crypto whilst on your daily commute to the office. Links down below is available on Apple, Spotify, Amazon Music, and here on YouTube. Okay, guys, with all that said, let's get this thing started and talk about the market overall. So let's jump down into the desktop here. And actually, let me split this up for a sec, because what we're going to talk about is going to be what's going on in the crypto space before we get into the charts for Bitcoin. So here we can see that we have a $979 billion market cap. Okay, that's for all crypto. When we just take a look at the altcoins specifically, we're about 570 billion. Okay, so the market cap has dropped down. This is kind of very much expected. And if we just take a look down here at the last 24-hour movements, I'm going to see if there's anything worth noting. Polygon's done pretty well at 4.8 considering the climate. What else is there in here? Anything? 4% for Lunar Classic. 7% for 𝗕𝗚, which is good to see. 38% for Mars Colony. But yeah, for the most part, the 𝗕𝗘𝗪𝗔𝗥𝗘 I think was about 6.5%. So for the most part, things are relatively flat, though. There's not exactly any double-digit growth within our watch list here. So yeah, it's relatively flat. So let's go ahead now and make this a little bit bigger and jump into the charts for Glassnode. We want to take a look at what is going on with the Glassnode data. We want to understand, is there anything kind of majorly that we should be concerned with, or is there any kind of significant increase in anything such as inflows or outflows and all of that kind of good stuff. So obviously we have the Glassnode data through the website. However, what I've gone and done is I've basically taken the APIs that are available from Glassnode and created my own reports, just because it makes things a little bit easier to see and digest, in my opinion. So mine look like this. Now over here we have our exchange, the balance of exchange. So basically this is how much Bitcoin is actually on the exchanges, and you can see how it's diminishing over time. So the macro is very much like an accumulation is going on, but there were a couple of upticks recently, and again this is the whales basically loading up the exchanges and selling into the upward pumps. Okay, over this side is the net change. So basically this is Bitcoin that's on exchanges as a 30-day average. Each bar is 30 days. What is actually going on? Are we seeing more outflows as a net difference, or are we seeing more inflows on that 30-day average bar? And for the most part, we actually came all the way back up to this neutral line. Not more going on than coming off, but quite flat. And whereas beforehand, we were looking at a lot more accumulation that was going on. Okay, so basically when the bars are facing down, more is coming off of the exchanges, and when the bars are up in the air, essentially that is more going on to the exchanges. So you can see that we're relatively flat within that 30-day average right now. Now at the top we have our total for 2022. This is basically 6.93 million Bitcoin going on to exchanges, with 7.18 million coming off. Okay, so a pretty sizable chunk that now comes in at, if my math is right, 250,000 Bitcoin more coming off the exchanges than has gone on. So over 2022, accumulation has occurred rather than anything else, which is good to see. Down at the bottom, we have the hodl waves. The hodl waves are basically indicating whether long-term holders are starting to get shaken out of the space or not. And for the most part, this is actually showing that they are diamond hands and are not getting shaken out. So we have, for example, no change on the 10 years, 0.01% of a change within the 7 to 10 years. What we don't know is what direction that's gone in. It does look like we have a little bit more activity down the lower end, so it could have gone down there, but it could equally have gone up into the buckets. We've got a slight increase with the 5 to 7 years. We've got the relatively, so we basically go from 3 to 5 to 5 to 7, so that's moving up in the ranges. So hardly any change here at all, guys. And the 2 to 3 years, the 1 to 2 years has actually increased. So for long-term holders, doesn't look like they're actually getting shaken out of the space at all, and they just continue to basically have diamond hands and continue to hodl during these moments of volatility. They're not getting shaken out. So this is always a concern if we were to see, a large couple of percent or 3% or whatever come out of the 7 to 10 year holders all the way down into the lower 24-hour bucket, because that's going to tell us that these guys who have been holding for a very significant period of time are now basically giving up on Bitcoin. That would be a concern. So that's kind of what's going on there. And there's nothing actually too much major. Now, the next one that I really do like, this essentially is our inflows and our outflows overlaid on top of each other. So, for example, 2 days ago, we saw 42,000 Bitcoin going onto the exchanges with 34,000 Bitcoin coming off, i.e. more Bitcoin going onto the exchanges than has come off, meaning that, there's going to be more supply for the demand to mop up. Now, yesterday we see the opposite. We see more outflows than inflows. We see basically the inflows at 33,000 and the outflows at 39,000. So, we have that net difference there of about 6,000 Bitcoin coming off of the exchanges. Okay, so this is a good way of just keeping a good eye on what is going on. A good example is if we have 44,000 coming in, but only 29 coming on out, then obviously you do know that there's going to be some negative price action with this, because essentially everything comes down to supply and demand. So keeping a good eye on the supply, which is what obviously we're talking about way up here with the balance of Bitcoin on exchanges, the net difference of Bitcoin on exchanges, the total inflows, the total outflows, and then obviously the day-by-day inflows and outflows. This helps us understand whether or not the supply is shrinking or expanding, and that has a huge impact when the demand kicks in a high gear or decreases in any way. Okay, it's all about the supply and the demand. Nothing to do with market cap, which kind of feels a little bit counterintuitive for some retail investors, but market cap is absolutely pointless to look at if you're trying to ascertain whether the price is going to move. Market cap is just a macro price after all. Okay, so that's that page. We can then obviously go ahead and check the wallets. We can see what's going on with our 1,000 or more Bitcoin wallets, the 100 Bitcoin or more wallets, and the 10 Bitcoin or more wallets. Okay, so for the most part, we actually see a slight uptick yesterday in the whales. These are the 1,000 Bitcoin or more. This is where we go from 2,142 whales up to 2,145 whales. So basically 3 whales accumulated here, but we do see a pretty steady decline within our 100 BTC whales and a slight increase with the retail investors. So essentially, as the price pulls back, retail tends to want to buy the dip. And the whales generally are the ones who created the dip, created any upward directional move, and then, basically sell back into the pump. So a lot of caution should be applied right now. Okay, an exchange is happening usually between the whales and the retail side of things. Now, on that note, what I will do is bring up our Glassnode data, and I will show you where all of that Bitcoin is flowing into, and it is these 1 Bitcoin or more. Okay, so as those whales have been decreasing and de-risking and coming out, after all, since May, $5.5 billion in BTC has been sold from institutional players, of which, I think 1 billion just under is the equivalent of what Tesla have done, right? So Tesla are quite small fish in the grand scheme of what's been sold, right? The 29,000 Bitcoin that Elon Musk and Tesla sold off, although it might be 75% of their holdings, is less than 10% of the total amount of Bitcoin that institutions have dumped on the market. Okay, so they don't think that this is just Elon Musk dumping on the market. But what you do have, though, is basically retail money is basically providing the exit liquidity for the whales. Okay, so when you see this line here going up, and we see, let's bring it up, this one here coming down, okay, these are your whales. They're decreasing. They're basically selling on the retailers. Okay, so as the whales are decreasing quite significantly, and I know my graph here makes it look like it's not that bad, but when we actually zoom out, okay, because I'm only looking at a 7-day period here, whereas I'm looking at a much larger period, you can see that since May, these guys have been selling on you. Okay, and we can see from the 1 Bitcoin or more, and that basically the retailers have been accumulating quite heavily since May. So basically, the retail side has been providing the exit liquidity for the whales. Okay, not exactly the best thing in the world. So follow the money essentially, and the money is exiting. It's not going in. Yet here we can see that the retails are basically pushing the price up. So that's Glassnode. I'm not going to go into any more on Glassnode side of things. Let's now jump into the price action of BTC. Let's clear this out a little bit, make it a little bit bigger, and we'll start talking about what's going on here with Bitcoin. Okay, so Bitcoin paired up with USDT on the hourly chart. Binance is the data source. Now, we had our upper limit here at 24,276. I already had this kind of scoped out towards 24.5 and 25.5. We fell a little bit short of that by about what, $200 or so, $250, something like that. A little frustrating. We then obviously talking about 20,796. We came right down into our 1-to-1 ratio, so that's looking pretty good. And one of the things I do want to be very clear that I have been talking about in the last couple of videos is that there's an upper limit to this bounce that is happening right now. I do not expect us to push through $22,527. In fact, I expect this market to come down very significantly, okay, and today is probably going to be the day for it. So we want to be very, very cautious, right? So all of this movement to the downside, this quite large price movement to the downside, and this little tiny push right here, this little push has basically reset us as if the market is ready to drop from up here. Okay, so we could see a very significant drop to the downside without any significant push upwards. And the concern is right down here at 19,522. If we hit 19,522 today without going up higher than, I'm going to take that point. This is going to be a little bit, hit and miss, but I'm going to say if we don't go higher than 21,552, then we do start dropping down and we hit, 19,532. I think we are going down into new lower lows at that point. Okay, we basically had to have a trigger point here of an impulsive structure, and yeah, basically we'll just start to really map out where that might look and where those lows might finally come on into. So that would be the worst kind of scenario. Now, it doesn't have to be this 21,552. That's quite it's a bit of a stab in the dark, but I would want to see. Yeah, I will probably want to see it stay below that level to keep it neat. So it doesn't, this level of 21,552 doesn't invalidate anything. It doesn't create validation or invalidation. It's just a line in the sand here where the price action, the price movement to the upside would be pretty significant. Now, also on that note, this area, if I actually come out over here, we can see that there's actually probably a slightly higher area of 21,588, and the area of previous resistance, previous support could be resistance again. Okay, so that area of 21,588 might be more of an important zone for us to kind of keep an eye on. But I don't want to see overlap, which is why that 22 level is also very important to me. So yeah, essentially that's kind of what we're looking at here. And this could turn into a 5-wave structured move if we were to come down lower than 19,500 $232. Now, you might be thinking, well, why so bearish? We've only just started to move on up. And well, we can take a look at the stochastic RSI to show us the strength of a movement. We can also throw in the volume here to help us understand what's going on, right? So basically the volume and the sentiment in the space and the price movements and the percentage of price degrees between, you know, point A and point B and all those kind of things help us understand, you know, whether or not this price is having, you know, pretty significant upward momentum or not. The stochastic RSI does a fantastic calculation of this. It's very sensitive to price movements. So in fact, let me grab hold of this. We grabbed that high point, we grabbed this low point. Okay, we have a 14% push to the downside. And basically, this takes us from an overbought area. We bounce around a little bit, but comes all the way down into this oversold area. Okay, so overbought to oversold, 14%. We do reset it a fair few times on that journey. Now, if we delete that and take a look at this recent push upwards from our oversold to our overbought area, you know, and all of a sudden we're talking about a 2.7% to go from oversold to overbought. There is a very little upward directional momentum there. And this is also confirmed when we start to take a look at that volume that is decreasing. It's been decreasing since we kind of hit this low point, but also just beforehand. So that last little push to the downside was decreased in volume. And then, of course, we push up. And if we take it really specifically from that low point, you can see the volume is decreasing as the price is pushing up. So that tells us that there is very little demand to buy Bitcoin and to take that price upwards, even when we're down here on this 1-to-1 ratio. This is what I was talking about with things like quants and some other cryptocurrencies that are looking for their fifth wave target highs. Essentially, they're going to be subject to what Bitcoin does here. Okay, if they're able to reach those high points, that's going to be fantastic. But the second that this thing is ready to go down, they're going to fall out of structure. So caution should definitely be applied. If we're still in any trades with quant, etc., I would be looking at maybe protecting any profits. And I know there was some profits have been made in a Discord server, specifically for the trader Patreon tiers, where we had some good ideas on the trading quant, for example, that we want to kind of, you know, protect those gains that we've made. No, there is some good potential upward swing for that one, but I would be very, very nervous right now. Now, with that said, if I get rid of this volume, we can see that the stochastic is overbought on our hourly chart. The biggest concern I have for Bitcoin is what has happened with our 4-hour chart. Okay, oversold, right down in that low point, as I said, that 2.7% move, I think it was. Let me just check, 2.7% move. Okay, we have started to really move this 4-hour stochastic. Okay, almost to the overbought area. So again, maybe this area of resistance is going to hold up and we are going to get rejected from here. So our 4-hour chart could become overbought today and we could see really significant price action to the downside. We know that we've got the FOMC meeting. That was something that we spoke about yesterday, I think, and essentially is going to bring us into a really interesting kind of spot where we see potential moves to the downside that could be really interesting. Now, obviously, the FOMC meeting could be perceived positive if it's only 75 basis points. It's not as bad as 100. That could potentially have a positive impact, but essentially, I'm just expecting negative price action on the back of the minutes on that. So something to be cautious about, something to be open to. We want to be bullish on the market, but right now it isn't really the time for that. So with everything that's going on here, knowing that this is a potential kind of a third wave in the making, we should be cautious when this gets up to the overbought area. That might give a few other cryptocurrencies like Quant the opportunity to hit their upper targets before requiring, you know, this next move to the downside to play out. So for Bitcoin here, we should be very aware that yeah, the momentum behind the price isn't there. The direction of the move that is going to come next is going to be down, in my opinion. We can be a little bit more predictive, I guess, if we were to try to do some small micro movements in here. You can see here that the 1-to-1 ratio basically comes in at 21,600. So we are right inside this little zone. I don't think there's a requirement to actually go ahead and complete a 1-to-1 ratio, specifically as we start to get into these resistance zones. I think the resistance is going to be too strong and we should move on down. So for Bitcoin, yeah, that's kind of where we sit on that one, right? We basically are looking at very little demand to push the price up, more selling pressure coming in as fear increases, and basically as supply increases and demand dwindles down, the price will drop down quite significantly. So understanding what causes price movements is critical. It's all about the supply and the demand, which is why we keep such a tight I say grip, we're not really holding it, but we keep a close eye on the supply of Bitcoin and those exchanges, as an increase in the supply can quite seriously cause some downward price pressure without really the requirement to sell an awful lot. You just need to see the demand drop and the supply increase, and that price is in free fall. And obviously it's the opposite way around, right? When we start to see an increase in the demand and the supply go down, we are basically going to see the price push on up. Okay, so understand how the market moves is very, very important. Okay, so that's Bitcoin. I'm expecting a very volatile movement over the next few days or so. Okay, that's interesting. Let's go ahead and jump into Ethereum. Okay, so with Ethereum here, we were talking about a fifth wave taking us ever so slightly higher. We did fall short of that, but we have completed what might have been an ending diagonal move. It is possible that we are still inside a fourth wave structure all the way down here. We bounced from this area of 1356, just a little bit north of the 1.382. This is a pretty significant bounce upwards here, and you know, it could be looking to complete a 5-wave move, which might turn into a zigzag or something like that, possibly, but a bit too soon to really say for sure. And yeah, because we haven't hit that 1.618, this is just a 3-wave structure at the moment. So keeping a close eye on that. It's possible that this is a zigzag and it moves up quite higher, which if it does, I would say that I'm probably going to be more concerned over that creating a wave 2 inside our wave kind of 5 over this side. But for the most part, we have finished our ABC structure upwards here. There's no need to go up higher, but it is still possible. But the targets for this now would have changed. We would have to take this high point and we'd have to take this low point over here. And we'd see that we're talking about 1,746 to 1,888 as a potential possible for a fifth wave. I'm just going to leave a small little rectangle up there. Yeah, I'm going to leave that there. Then just to delete the fibs. So that gives us that potential, but very, very small possibility in my mind. As you can kind of see right now, we're up against this double top right here, and this. Let me grab hold of this. I'm sure this is going to marry up really well with anything. Doesn't look like it, but there's a lot of resistance right up here. As you can see, a lot of wicks kind of coming into that range. So currently we found this double top. Double tops are usually bearish. $1,458. So if we have moved up here a breakdown, this could basically be a reset for a move to the downside again. So keep an eye on that. We are overbought on our hourly chart. We'll just check that for hourly. We have the same problem as what we do with Bitcoin, is we go from this oversold area and we're heading up to this overbought area without really doing terribly too much impressive price action. So if we grab hold of our percentage points and we start to look at that, we've moved up 7.5%, but we've moved the stochastic RSI very, very reasonably. This now means that there is a small amount of room to the upside. We don't actually have to have the price move up higher. And yeah, from there we can drop down pretty significantly. Now, if we go ahead and just come into our hourly chart, bring up our volume, we can of course analyze what's going on. Now, as we start to pull back down, we can see that there is a decreased volume here. So even at this point, which would have been 2 days ago, about 8 o'clock in the evening, we start to see this pull to the downside and the volume start to decrease. This meant that we were going to run out of momentum and we're going to find a good area to kind of stabilize. We actually bounced from the 1-to-1 ratio right here, and basically even on this move to the upside, the volume continues to decrease, right? So even if I just bring this over to this area right here, you can see that that volume is basically decreasing as we push that price up. As we find that double top, we could now see an increase in volume from this low point where we start to pull that pressure back down. Now, when we take a look at it from the 4-hourly point of view, again, you get a very similar story. As that volume, as the price is pushing up, the volume is decreasing very, very significantly. So there isn't a lot of optimism behind that right now. And, you know, if we come up into our daily here, bring this back down, just move that across. Let me actually, I'll leave that there. For a second. So from this low point over this side, we can see that as the initial pump to the upside, we had lower volume. We then had an increased volume as we fell down. And then we kind of got into this kind of really relatively static area as a lot of FOMO really pushed in. And then recently we see volume decreasing as we pushed up that last little bit. Again, pretty typical with a wave 5 decreasing in volume, running out of momentum. So on our daily chart, you know, we are it's very clear to me that we have to kind of pull back down. We failed to push up higher than $2,159, which is our wave 1, basically meaning that we have to move down into our final 5th wave lows, of which we have mapped out at $595 to $758. That hasn't changed because we haven't moved up higher and we haven't dropped down lower. So our 5th wave is now stuck in there and is locked in my opinion. So yeah, for now, that is kind of what this is looking like. And unless the price pushes up higher than 2,159, then we have to move on down. Okay, so that's kind of where Ethereum is sat right now. Essentially, yeah, we're a little bit more bearish on ETH now than we maybe have been in the past. Let me just check one thing here. Stochastic on the daily is moving down a little bit. On the 8-hourly has to move up, 4-hourly, so that's all looking pretty standard as well. I'm not overly concerned about those. So yeah, it does look like we have to start our 5th wave coming down for Ethereum, and yeah, our targets are quite low. So what will be the catalyst for that? I do not know. Elliott wave theory is basically just plotting people's behavior, and based on their behavior at the moment, it is predicting that there's going to be, you know, a lot of downward price pressure that'll be driven from supply and demand. And with all of the various things that are going on in the real world, this week is a very interesting week to see a lot of negative price action, in my opinion. So guys, I'm going to leave the video right there. If you have found this useful and informative, hit the like button. I really do appreciate that. If you happen to be new to the channel, then why not go ahead and subscribe, tap the bell, select all notifications, and in doing so, you will be kept up to date with absolutely everything that we do here at Cheeky Crypto. With all that said, done and out of the way, I hope everyone has a fantastic day, and I'll catch you all in the next one.